Hi, good afternoon, everyone. It's our pleasure to host the management of Aditya Vision Limited. With me, I have Mr. Yashovardhan Sinha, Chairman and Managing Director, and Ms. Yoshamvardhan, Whole-time Director. To take you through the results, I will hand over now to the management. Over to you, sir.
Thank you, Percy. Good afternoon, ladies and gentlemen, and welcome to our earnings conference call for Q3 and 9 months FY25. Today, we will be discussing our company's financial performance and strategic decisions. Our investor presentation is available on the exchange, and we trust you have had an opportunity to review it. We are happy to report a strong performance in the first 9 months of FY25, with consistent results across all key financial metrics. For the first 9 months of FY25, our revenues grew from rupees 1,367 crore in 9 months FY24 to rupees 1,773 crores, an increase of 30%, and our PAT grew from 69.22 crores in 9 months FY24 to rupees 89.51 crores, an increase of 29%. In 9 months FY25, we have already surpassed the entire revenue and PAT of FY24. While EBITDA and PAT margins have remained stable due to our deliberate focus on scaling the business, we continue to remain committed to driving operational efficiencies and sustaining long-term growth. We have reported a good performance in this festive quarter as well, despite overall subdued consumption and sluggish demand. Our revenues grew from rupees 413 crores in Q3 FY24 to rupees 508 crores in Q3 FY25, reflecting a growth of 23%. Our EBITDA margin stood at 9.16% for the quarter. Profit after tax grew by 9.25% year-on-year to rupees 24.22 crores. We successfully opened 5 stores in Q3 FY25, taking our store count to 161 by end of Q3 FY25. We are on track to scale up our business and open stores strategically. As on date, we have 167 operational stores. We are now present with 29 stores in 18 districts of UP out of total 75 districts. This financial year, we have started expanding our operations in UP beyond Purvanchal, Eastern UP, and now have around 8 stores operational in Central UP, including 4 stores operational in the state capital, Lucknow. In Purvanchal, Eastern UP, we have established a strong presence in key cities such as Varanasi, Prayagraj, and Gorakhpur. In this financial FY25, we have already opened 22 stores and surpassing our guidance. We are on track to open 8 to 10 additional stores by the end of financial year 25. We have made significant progress in Jharkhand and Uttar Pradesh, which is reflected in the increasing revenue contribution coming from these regions in Q3 FY25. In Q3 FY25, Bihar was the largest contributor to our revenue with 79%, followed by Jharkhand at 13% and Uttar Pradesh at 9%. In 9 months FY24, Bihar's contribution stands at 81%, followed by Jharkhand and UP at 11% and 8% respectively. Our focus remains on expanding our retail footprint by strengthening existing locations and entering new markets in Hindi heartland, which represents substantial growth potential. We are confident to surpass the target of 200 stores by FY26. The same store sales growth for 9 months FY25 stands at impressive 15%. Finally, I would like to emphasize that we continue to invest in future growth as long-term tailwinds are very strong in consumer durable industry as well as geography where we have chosen to operate. We remain confident in our future and our ability to set new industry standards and records. I will now hand over the floor to Mr. Yoshamvardhan to provide an overview of the financial highlights for this quarter. Over to you, Yosham.
Thank you, sir. Good afternoon, ladies and gentlemen. We are pleased to present the robust financial performance of Q3 FY25 and 9 months FY25. Here is a summary of our financial achievements. In 9-month FY25, revenue surged by 30% from 1,367.62 crores in 9-month FY24 to rupees 1,773.08 crore in 9-month FY25. Gross margins were maintained at 15.37%, with EBITDA reaching rupees 161.75 crores. EBITDA margin stood strong at 9.12% during the period. PAT grew by 29%, rising from rupees 69.22 crore in 9 months FY24 to 89.51 crore in 9 month FY25. SSSG for 9-month FY25 stood impressive at 15%. In Q3 FY25, revenue saw a YOY increase of 23%, reaching rupees 508.45 crores compared to rupees 413.26 crores in Q3 FY24, driven by operational expansion and strong same-store sales growth. Gross margin stood at 15.58%. EBITDA for the quarter was rupees 46.5 crores with EBITDA margin at 9.16%. PBT for the quarter stood at 31.20 crores and PAT grew by 9.25% year-on-year to rupees 24.22 crores. Our store count stood at 161 as on 31st December and 167 stores as on date. We can now open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Devanshu Bansal from Emkay Global Financial Services. Please go ahead.
Yes, sir. Hi. Thanks for taking my questions. Sir, our Q3 performance is strong given that the industry growth in terms of volumes for large appliances has moderated sharply to single digits now, right, after a strong H1. In your assessment, sir, what are the key reasons for this moderation, and what are the key triggers also that you are watching which should catalyze the demand again in the industry?
In my opinion, in fact, there has been sluggish demand. This is only because of the macroeconomic in nature. In the sense, with high inflation and high interest, this is the main factor. And I think in coming months, I think it is going to ease off.
Understood. And some other peers are also indicating tighter liquidity as a reason. So is that still not a challenge for us, or how should we see that?
Liquidity is not a challenge for us. Absolutely not.
Understood. Second, sir, I wanted to understand what is the revenue salience of Korean majors for us vis-a-vis non-Korean brands in our business. So if you could just help me understand that.
They are maintaining their level of share of the store. In fact, it is stable.
Okay, so pan-India, I guess there is some moderation in their market share. So is that not visible in our area of operation?
No, it's not that visible. I'll say that it is steady.
Understood. And just if you could also highlight other leading brands apart from Korean majors across AC, refrigerator, and washing machine categories for us. Just one or two top brands for us across the other three categories.
Of course, Whirlpool is there, and Godrej is there.
Whirlpool, Godrej will be in the left side, right?
Haier is also there very much. Now, IFB is also catching up.
Understood. Okay. So last question from my end. Wanted to understand the reason for drop in gross margin this quarter. So is it like higher discounting in the wake of weak demand environment, or it is something related to the revenue mix for the quarter?
I will put it that it was the sluggish demand which brought it down a little bit. And the reason was also because every entire festive season was in single month of October. And after that, market became very sluggish. Even festive season was quite good. But then after October, market was very sluggish. So, of course, when all of a sudden you are up with stocks and market becomes flat, then gross margin will come down by a few bits.
Understood. Just a continuation to this. So, typically Q4 is a inventory build-up quarter for us, right, sir? So, what kind of growth are we projecting for the upcoming season? So Q1 typically is like 35% of our mix, and we typically prepare towards Q4, build up inventory in Q4. So what are your initial thoughts around expected demand in the upcoming season?
We are very bullish on this aspect, Devanshu. In fact, we have already started building up our inventory. Because as you know, approaching the summers, of course, it becomes very difficult for you to build on the inventories for air conditioners, refrigerators, and other cooling products. So we have already started building on inventories, and it will be our constant, in fact, exercise up to going through March.
Understood. So that interest expense that typically.
Hello?
Sorry to interrupt. The line for the speaker has been disconnected. We'll move to the next.
Hello? Can you hear me?
Sir, we can hear you. We are moving to the next question, which is from the line of Chirag from HDFC Mutual Fund. Please go ahead.
So just a few questions. One is, this quarter, what was SSG?
SSG in this quarter was 13%.
All right. So the second question was, you mentioned that while demand has been sluggish, you are hoping for a recovery, and you are also entering the next season with some optimism. So if you could sort of highlight the reasons behind that, what gives you this optimism, considering that post-festive demand has been sluggish?
Because, in fact, our presence in the entire this heat-prone area is now quite a lot, in the sense that we are now present we have got 25 stores in 17 districts in UP, which is always typically it has a very hard summer. And second, the biggest thing is that even we cannot discount the factor of Kumbh Mela, which will bring lot of crores and crores of money to UP. And UP, and it is now even Varanasi is also flooded with tourists. Ayodhya is flooded with tourists. Kumbh already everybody knows. So the entire money, we are expecting that this summer it will be a very, very, very good Q1 for our company.
Sure. And have you seen any recovery in the first part of this quarter, which means in January? Have you seen any kind of improvement, or does it continue to be?
Generally, it has been flattish. So it has. Of course, we are in growth, but I'll put it as flattish only.
Great. So thank you so much.
But we are expecting growth in coming in February to March.
Great. Thank you very much, sir.
Thank you.
Thank you. The next question is from the line of Manoj Gori from Equirus Capital. Please go ahead.
Yeah, thanks for the answer. So my question here is on the gross margin. So if you look at gross margins contracted by 96 basis points, so was it that we offered higher promotional schemes and offers to the consumer? And probably was this one-off, or should we expect that to continue in the coming quarters as well, given that there has been sluggish demand environment? So any read on this, and probably any outlook on the gross margins for the coming quarters?
As I told you earlier, that gross margin has come down due to sluggish demand and the other macroeconomic challenges faced by us. As I told you that after festive season, market became very sluggish. So these were the reason for the contraction of gross margin. But we expect that we are going to again maintain this gross margin in coming quarters.
Okay, so from fourth quarter onwards, one should largely expect stable gross margins on YOY basis. Is that understanding correct?
I may say so. At the moment, we are just in the very first month of the quarter, so any projection will not be right. But we do expect.
Yeah. And so lastly, if we look at recently, there has been a lot of noise on the supply challenges for the room AC brands. Whatever you are planning to stock for the upcoming summer season, are there any uncertainties or probably whatever stock you desire or you would have budgeted for? Is there easy availability on the stocking side?
I'll say that this is on first come, first basis only. And so all manufacturers, they are aware what was our contribution to their sales. So actually, what I've already told that we have already started building up our inventory as earlier as December only.
Right.
So what happens that when you start building your inventory early, then you get the desired type of models and in fact your desired inventories.
Correct, sir. Yeah. Thanks, and wish you all the best.
Thank you.
Thank you. The next question is from the line of Aniruddha Joshi from ICICI Securities. Please go ahead.
Yeah, sir, the question on the store count, because we are already have reached to 167. So, where do you see the count reaching at the end of FY25 and at the end of FY26 also?
We've already, in fact, stated in my statement that we'll be definitely crossing 200 stores by the next financial year. And this financial year, we are hoping to add another 8 stores.
Okay, and all the stores will be in UP, that's right?
Not all. There are a few in Bihar also. In such districts where we are getting very good response, we are trying to open another store there. Previously, we were a single store company, showroom in that district. So few will be there, and mostly it's of course UP is the story.
Okay. Sure, sir. Understood. And overall, if you can indicate the SSSG in volumes also, means is there a change in revenue mix as well? Because the gross margin has contracted. So is there any change in revenue mix towards the low end of the product portfolio?
Yes, there has been, because whenever there is a sluggish demand, then IT and mobility, they have their share of counter will get bigger.
Oh, okay. Sure, sir. That's helpful. Thank you.
Thank you.
Thank you. The next question is from the line of Arpit Shah from Stallion Asset. Please go ahead.
Yeah, hi, Yashiji. Basic current numbers from the company. Just wanted to understand, are we looking at store count to 180 stores by end of FY25 or at 175? Just got the number.
175 will be a definite possibility, and we are trying. In fact, so many stores are going under work in progress. So once 175, we are definitely going to achieve, and we are trying to, in fact, open more stores, even more than 175 stores.
And you believe that Kumbh Mela, which will be a very big income generation for the state of UP, you'll be able to turn around the seasonality for your business, whereas Q4 is...
Thank you, sir, but we cannot hear you clearly.
Yes, I'm also not able to hear him clearly.
Hello? Is it audible now?
Yes, very much.
Yeah, I just given that Kumbh Mela is going on in UP, and we have a decently large presence in UP. You think you'll be able to turn around the seasonality in the business, whereas Q4 this year could be possibly higher than Q3, given the Kumbh Mela and what kind of income it is going to bring to the people, to the population?
It can. In fact, we are very much hopeful and bullish about it. कुंभ मेला बहुत अच्छा जनरेट किया है वहाँ पे, not only in terms of as you everybody is aware, entire world is aware that जिस तरीके का वहाँ पे response हुआ है, and mostly people are now going to even visiting Ayodhya and Varanasi and all that. So in fact, right now it is disturbed also since Kumbh has started. Our in fact showrooms are also disturbed, but we expect very good turnaround in second half of next month.
Got it. And if you can just put some insights on our operating expenses, which has gone higher this quarter.
Yes, because of we have opened around 30 stores between last quarter and this quarter, and so that has gone up. But I think since we have opened many stores which are yet to mature, so I think it is a temporary in nature. This is OPEX getting up.
Got it. Okay. Thank you so much. Pleasure.
Thank you. The next question is from the line of Onkar Gugalde from Three Investments. Please go ahead.
Yeah, my question was regarding, firstly, you mentioned that many of the stores have not reached maturity stage. So, like in percentage terms, can you quantify at what stages they are?
No, actually, you will see our growth stat, the past record of growth. Then you will find that we have added around 40 and 30, around 70 stores in 1 year or 1.5 years time. So these are typically, as we have already told in several earnings calls, that typically all our stores they mature by end of 3 years of opening. But not that they don't start contributing. They start contributing. But as you are opening new stores all, again and again, then operating costs, it is going to go up. Which, in my opinion, are temporary nature, because in coming quarter, this quarter also, the current quarter also, next quarter, Q1 of FY26 also, it's going to do much better.
Okay. The second thing is you had raised around 282 crore, and so out of that, how much you have utilized, and because of that, the interest component should have gone down, right? So, but we can see year-on-year increase in terms of interest component as well. So, what's the reason for that, and how is the utilization for 282 crore?
We have already utilized 282 crores, and we have already filed all the details. You can find it from there. And as regarding interest cost, we are a growing company. We are not idle company sitting there with the cash. We are utilizing the cash. We are making new investment capex investments. So inventory is also needed. In fact, we are going into very summer season, which is supposed to be very, very good one. So we are fully invested in our stocks also, inventories also. So interest cost, of course, it is it is a strategic in nature also, when you have to stock up, build up your stock according to the quarter to quarter.
Okay, so like for example, what's the sustainable kind of EBITDA margin we can model when we model your company, sir?
We have already uploaded on our investors' presentation. Our sustainable margin will be around 8 to 10%.
8 to 10% of EBITDA margin, right? Okay, and as far as you mentioned that you have used the entire proceeds from the fundraise, so that has mostly utilized for inventory or like store expansion or combination of both?
Combination of both. We cannot invest it only on working capital. Otherwise, we have to make capex also. So it is a mix of both things.
Okay, just one last one thing. You have recorded around 23% revenue growth, 30% year in Q3 and Q 9 months respectively. I mean, when can we see operating leverage coming in?
There is operating leverage in 9 months, if you will see there. Overall, in 9 months of FY25, our operating leverage has been quite good because our profits are as much as our sale has grown.
Yes, correct. But this quarter this has declined because of the sluggish demand you are saying, right?
Yes, entire our manufacturers were also reeling under this. So it has been a sluggish quarter.
So if you are basically saying 8 to 10% EBITDA margins are sustainable, so you are targeting around 20 to 25% revenue growth. So can we expect around similar 20-25% growth on the profitability?
Yes, you can assume that.
Okay.
But we give our guidance that you can find our guidance in our investor presentation where we are very clear about it. We have been always surpassing our guidance.
Yeah, this 20-25% kind of growth, it's from your investor presentation only, sir. I'm talking about that only.
Also, we have repeatedly, we have in fact exceeded the guidance.
Okay, all right. Thank you.
Thank you. The next question is from the line of Vivek Gautam from GS Investment. Please go ahead.
Yes, sir. Thanks for the update and the opportunity. So, hello, am I audible?
Yes,
hello?
please.
Yeah. So I just wanted to know, sir, why about top line growth is quite good, but why the PAT growth is on the slower side, sir?
Because of operating costs are there because of many new stores.
Because now only operating leverage should come in because our number of stores is also quite high. So 7, 8 stores, 9 stores, the operating leverage should come out.
In time to come it is going to happen, but right now, of course, we have been opening stores, and they will start contributing to our top line. That will ease off our operating cost.
Okay, sir. And how is the future looking like, sir? Slowdown so hai, but in our Bihar state and Jharkhand state, UP state, potential is also quite large, sir. So we are much better than the other markets, sir?
Yes, we are much better placed in view of manufacturers also. In fact, this geography is doing very well. And yes, we do expect that even in bad, very worst days also we have been doing well at a 23% growth of top line. And we can expect that if there is some turnaround, and this area is going to do very well. As I told you, a very big factor UP ka hi hai, where such a big event is happening.
Mm-hmm. OEMs are quite happy with our performance versus the other geographies, then, sir.
Yes.
Okay. Okay, sir. Thank you, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Anirudh Joshi from ICICI Securities. Please go ahead.
Yeah, so sorry, just one follow-up question only.
Yes, please go ahead, Anirudh.
Yeah, sir, now obviously we have done good amount of work already in UP. So is the margin in UP, Bihar and Jharkhand, all three are different? Essentially the question is now we are expanding aggressively in UP and there is a slight margin impact. So is it the margins in UP are relatively low than the margins that we are generating in Bihar and Jharkhand?
It's a basket, in fact. We will have to understand. It's not about the state. It's about a basket in, let us say, even in UP, there can be several stores. We can, where in fact, where there can be a very big competition, and somewhere there is no competition. So it's a mix of, margin is a mix of locations. So it's not about only UP or Bihar or Jharkhand. So there is a management strategy there, how you manage your margins.
Okay. Okay. Sure, sir.
I hope it is clear to you, Anirudh.
Yeah, sure, sir. It is clear. Thanks.
Thank you. The next question is from the line of Varun Singh from Alpha Accurate Advisor. Please go ahead.
Am I audible?
Yes, you are.
Yes. Please go ahead.
Yeah, sure. Thank you for the opportunity. So my question is regarding Mahakumbh Mela, which has started from 13th January. So we are already maybe more than 2 weeks down into this event. And as you pointed out that maybe this month has been relatively subdued, and the second half is expected to be much better, driven by whatever impact on the disposable income of the local population out there. But considering that our exposure to that city itself, or maybe UP at a large, won't be, I don't know that number, maybe 15-20%. And given that this event is going to last till 26th of February, so on account of general disruption, etc., don't you think that maybe the fourth quarter numbers are likely to be more impacted than getting benefited? Just led by the analogy of disposable income improvement. How would you think about this, sir?
Now, I will put it like this, that actually, in fact, when such big events happen, it not only invigorates that area only. In fact, it drifts to other areas. As मैं बताता हूँ, catering to let us say 8 crore, 4 crore, 2 crore people. It's not only people of Prayagraj can only handle that type of business. People from other districts, they also come in to handle the business there. So it is about the whole area. In fact, it benefits the whole area. So what we are seeing is that already we are doing well in UP, and what we see that let us say before Mahakumbh will end, I think money will be there with everyone, and that money has to come to such aspirational things what we are selling.
Does that answer your question, Mr. Varun?
Yeah, sorry. Yeah, so basically, so you are saying that, I get your point that so many people will be positively impacted from the income side of it. But given that so much of crowd is also there, I think our store level operations would also be getting disrupted. I was thinking from that point of view over and above the positive side as you highlighted.
But I'll tell you, like we are having 25 stores in UP. Out of that, 3 stores are in Prayagraj. Yes, they are impacted because of huge rush and all that. But other stores start performing well because of that.
Understood, sir. And then secondly, just wanted to understand, given that 70 stores, as you pointed, is 1.5 year old, compared to the total store that we have as on today, so roughly 40% of the stores are very, very young. Yeah, so like the same store sales growth number, which is currently reflection of these maybe non-new stores. So you think that when the total number of new store addition or the new age store, that ratio comes down from 40% to let's say 20%, the pressure on SSG will start mounting? And how would you think about this?
I have been repeatedly saying that in this geographic population is very large, penetration is very low, and this is the reason even our very old stores are also having a double-digit SSG growth. So this is a whole factor you have to take into account.
Understood, sir. And sir, in our definition of same-store sales growth, we will consider more than 1 year old store in both numerator and denominator?
Yes, sir, I think so. It must be given in investor presentation also.
Okay, understood, sir. Understood. And the top, sir, in our store, and please pardon my ignorance, I'm tracking this company relatively new. Would you also be selling private labels, meaning your own brand of AC and fridges, or it's all branded stuff?
No, as per our policy, we won't be selling any private label.
It's all branded. And when you called out about Whirlpool being the top brand, what would be the revenue? Maybe in any one particular segment, if you can give us some sense out of.
For Whirlpool only you are asking?
Yeah, I mean Whirlpool and Godrej, as you said that these are the top two brands in the AC category.
That were the two brands. I said that after Koreans, they were the other big brands. And they contribute around, we do not in fact divulge how much they contribute because of manufacturers' reluctance.
Okay. And sir, maybe, I mean, any sense if you can give us, it will be helpful with regards to, the number one player, Voltas, or the maybe number two player, Blue Star, etc. Their revenue contribution, or you don't think it will be appropriate to share?
That will not be appropriate to share with you, but definitely they doing very well.
Okay, sir. Sure. Thank you very much and wish you all the best.
Thank you.
Thank you. The next question is from the line of Devanshu Bansal from Emkay Global Financial Services. Please go ahead.
Hi, thanks for the follow-up opportunity. So just one bookkeeping question. I wanted to know about the contribution of category-wise in home appliances, digital and others. What is the revenue mix in 9 months for these categories?
I think it must be given on the investor presentation.
It's not there, sir. It's not there, so that's the reason I'm asking.
We disclose it only half yearly, so that will be there in the next quarter.
Okay, sure. Yeah.
Thank you. The next question is from the line of Dhagash Shah, an individual investor. Please go ahead. Dhagash Shah, please go ahead with your question. Your line is unmuted.
Hi, good afternoon. Thanks for the opportunity. Just one question, sir. On the product side, how do we look at seasonality in terms of different product categories per se, if you can help us understand a bit?
I could not understand your question. Can you please repeat it and speak clearly?
Sure. So my question is, sir, for the different product categories, what sort of seasonality do we see? So, for example, AC would be higher in the summers. So for the others, sir, if you can just help us understand a bit on that aspect.
Usually it is mixed. Apart from summer cooling products, it's always mixed categories. In the sense that, yes, like washing machines will do very well during monsoons or during winters. In winters, heating products will have a better sale, like geyser and all that. But mostly it is mixed only.
Okay. So, is the understanding correct, sir, then that the air conditioners would have a higher share of revenue?
Definitely, yes. Their contribution highest.
Okay, sir. Thank you. That's all from my side.
Yeah.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question for today. I would now like to hand the conference over to the management for closing comments.
We trust that we have addressed all your queries to your satisfaction. If you have any remaining questions, please do not hesitate to reach out to our investor relation agency, Go India Advisors. They will be more than happy to assist you further. Thank you for your time, and we look forward to continuing our growth journey together. Thank you.
Thank you. Thank you. On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.